Hyatt. Mr. Mark Hoplamazian, President and CEO, Hyatt Hotels Corporation. Prior to being appointed to his present position, Mr. Hoplamazian served as the president of the Pritzker Organization, the principal financial and investment advisor for Pritzker family business interests. During his 17-year tenure with the organization, he served as advisor to the various Pritzker family-owned companies, including Hyatt Hotels Corporation. In conversation with Mr. Hoplamazian, we have Ms. Ashish Jakhanwala, Chairman, Managing Director, and Chief Executive Officer of SAMHI Hotels. Mr. Jakhanwala was previously associated with Interglobe Hotels Private Limited as a Regional Director Development and with Panel Care Consultants Private Limited as a consultant. Please put your hands together for Mr. Hoplamazian and Mr. Jakhanwala.
Hi, morning everybody. Mark, morning. What
Good
a
morning.
pleasure to have you here.
Thank you.
So since, I think the earlier discussion was very interesting, they took some of our time. We have two challenges to make this more interesting and do it in less time, right? So quick introduction. Mark is, everybody knows Mark. He's the CEO of Hyatt Hotels. I first met Mark in 2013 at an interesting breakfast with a guy called Sam Zell.
Yeah.
And at that time, Mark, you were 6-7 years into hotels.
Yes.
So were you an outsider then, and are you an outsider now?
Yes and no. After 17 years of being in the industry, you're no longer an outsider. Absolutely. Coming into the industry, I knew a lot about Hyatt from a corporate structure perspective, but not the business. And the good news is when you come in and you're ignorant and you have to ask a lot of stupid questions, people in the industry are very generous. So I found no resistance in getting time with people. And I knew, for example, Barry Sternlicht for many years, way before he got involved in Starwood and so forth. So I had some other relationships, but my first meeting with a big owner was Chris Nassetta, who was running Host Hotels, and then he became, so I've known Chris forever, really since day one of my existence at Hyatt. And the network is magnificent. I mean, one of the great things about this industry, as we all know, is this. Like, you have a network of relationships, and they really matter a lot.
Mark, your LinkedIn profile, interestingly, has a suffix which says, I think, empathy plus action equals care. Yeah. And I know you're very sensitive about the associate well-being and the whole environment that you operate in. As a CEO of a hotel company today, in 2024, how do you really run an organization and motivate people and demand a high degree of commitment from them on a daily basis when the rest of the world is talking about work from home? And that's really not an option you can give to associates in your company.
Right.
So how do you really balance this intent to care, but then be doing or asking something which is so contrary to what the fad, if we may call that to be a fad, of work from home and commitment at the hotel?
Yeah, it's a great question. Of course, you can't run a hotel remotely. So it requires people to be in person. I think the thing that gets missed, though, is the sense of community, having a team. We refer to everyone who's involved with Hyatt Hotels as part of the Hyatt family. And we don't use that word lightly. Of course, we were founded by a family, and that family, the Pritzker family, still owns a majority of the company. But that's not really the way we refer to the Hyatt family. It's not the Pritzker family, it's the Hyatt family, meaning our relationships at work are primarily defined around emotional connections as opposed to transactional. Some companies I've dealt with are completely transactional. I deal with you as a colleague when I need something, and once I get it, I move on. At Hyatt, the relationships are much more personal. If we'd worked together at Hyatt for more than 5 years, we would know each other's kids, we would be emotionally engaged with one another. There's so much that you get out of satisfaction of that. You know, I'll never forget, back in August of 2020, in the middle of the pandemic, Bill Gates came out and said, corporate travel is going to be more than 50% lower than it was before the pandemic forever. And Microsoft is one of our top 10 clients. I have the data. It's absolutely untrue for them. And it's untrue for a lot of companies. And I think that the fundamental thing he missed is that human interaction, that human experience. So I think people get so much satisfaction and fulfillment out of that in being together with other people and feeling the support, the human support. That's actually the difference maker. I go to the office every day just for that. Like, I want to be with people.
Yeah, and Mark, we were discussing in the room that office sector is suffering in the US.
Yes.
Residential is not necessarily the star. Hotels seems to be doing really well.
Very well.
In US, in Asia.
Yes.
Is there something that we're not able to understand which is underpinning the success of the sector? Is there something that excites you? Is there something that worries you? Because clearly there's a lot of euphoria in the sector globally. And euphoric are the times when one needs to be the most worried, honestly, right?
Yeah.
So is there something that worries you? Or is there something that we're missing as to what is propelling this sector to do so well?
I believe that the fundamental driver of why demand has looked the way it has over, since people have been able to travel again is sustainable because there's so much satisfaction and engagement that you get out of being with other people and with your family. So the priority on leisure travel has been unbelievable, and I think it's sustained, and I think it's going to be sustained. By the way, our fastest growing customer base, the purpose of visit in India is leisure, and it's domestic leisure. It's not people coming in for either spiritual tourism or otherwise. It's primarily driven by Indians traveling within India and, frankly, discovering more of the country. So we have 50 hotels open right now in 17 markets. The next 50, which we have in the pipeline, we will be entering 28 new markets. 28. What does that tell you? It means that people are seeking out, and we're trying to be in many more markets around the country because there's so much to discover. So and we see the same phenomenon in China. We see it in the United States. There's a lot, and in Europe too, a lot more travel in your local markets. So that's the first thing I would say. Secondly, supply growth has been very low. Pretty much everywhere. The massive lockdown, the severe lockdowns that we saw in 2022 in China shut down new hotel development. You weren't allowed to go to a work site. So supply growth declined. In the United States, supply growth declined. In India, supply growth declined for many reasons. Not just because capital is dear, but because if you're building a greenfield hotel, it takes forever. So supply generally in the world is not growing anywhere near the demand level. And it's simple supply and demand. So I see nothing but positive attributes on a continuous basis. What am I worried about? I'm worried about the same thing that many people are, geopolitical instabilities, politics at large. There's a lot of political stuff going on and conflicts. So yeah, I do worry about those things. And I do think that countries and the RBI and the Fed and so forth, they have to pay attention. We cannot end up in a situation in which capital formation is just so difficult.
Are you worried about capital formation?
I have been, primarily because the inflation concern has been quite acute in the United States and in Europe. I've been a big proponent of India forever, and I've been wrong most of the time in the last 15 years because it's just been so hard. But now, I think with operating performance having improved so dramatically, the maths work for projects. And yes, we still have very high interest rates. So I think that the capital formation is always a concern because you really have to be able to borrow in order to make these projects
So Mark,
work.
interesting. Every hotel company wants to be asset light.
Yeah.
But they need a counterparty,
Yeah.
right? And the counterparty is somebody who wants to be asset heavy.
Exactly.
Right. In an environment where interest rates are high, capital formation is difficult, would you think that the fodder for growth of asset light will get challenged because the counterparties have difficult access to capital? Fewer hotels may get built, and if your hotels are built, fewer hotels are available to be managed or franchised, right? Does that in many ways worry you? Because in the end, you need your partners to get access to capital to build hotels, right?
Yeah.
And are you seeing that in at least in the Western markets?
For sure, you've seen it in the United States. I mean, new starts and new construction has declined. We were just growing at a lower rate in terms of new hotels being built. In India, I think the same has been true, but here's the other reality, and we're seeing this just now in the United States. Operating performance has continued to improve so dramatically that owners are not stupid. They understand that this is, with sustained limited supply growth and demand growth that looks good, with NOI improving, that the longer they take to put a shovel in the ground, the longer it will take for them to get to great economics on the other side, which can sustain some higher interest rates. So we just launched a new brand last year called Hyatt Studios. It's a upper mid-scale extended stay brand. And most of the first projects that are now under construction are 100% equity funded. And their attitude is, we'll put all the equity that we need in, we just need to get started. We'll worry about the debt financing as we go, but the economics are going to be very strong.
So I just saw your interview this morning with Wall Street, which it seems you...
I haven't seen it yet. I haven't
seen,
caught up
right?
to it.
And you've talked about Hyatt becoming more asset light.
Yeah.
You've disposed some $2 billion or $4 billion worth of assets over the last few years.
Yes.
So I have two questions. One is, we understand the need to be asset light, and I think that in an interview you articulated it well. But you also mentioned that you're also focusing on acquisition of portfolios in the luxury space.
Yep.
So can you let us know why more luxury? And what is the end of this asset light scheme?
Yeah.
Right.
So a couple of things. One, we are asset lighter, but we are not asset light
asset
entirely.
lighter,
Just to be clear. By the way, we're the only major international brand company that has had a significant investment in assets in India, period. The only one. And it's been with our great partners, the Saraf family.
Accor also has a lot of investments in India.
They do through partnerships, but
yeah, that's right.
And I would say that our investment here is larger than theirs.
That's right.
So you're right. But I think I've always said we are going asset lighter, but the idea of being asset light and 100% is a fallacy. There's no company in the world that is completely asset light. If you really pay attention to the financial statements of all these companies, they have some sort of equivalent real estate exposure. They have operating guarantees. Yeah. They call it different things, but they're not independent of real estate exposure. I think real estate is part of the business. So if you're not close to it and you haven't lived as an owner, as we have from forever, from our founding, it's harder to really empathize with owners.
But what about this luxury?
On the luxury side,
about the luxury.
So we made a decision a long time ago not to try to be everything to everyone everywhere, but we wanted to get deeper in our knowledge base of the high-end traveler. And we've done that. So in the last 5 years, we've doubled the number of luxury hotels we have. We've tripled the number of resorts, and we've quintupled the number of lifestyle hotels, more on the high end of lifestyle. So we feel like getting deeper and deeper in the knowledge base of the high-end travel segment is going to allow us to super serve that segment and do more for them, capture more of their travel wallet, and be more effective and relevant to them. And by the way, they're the ones who are durably spending money. They're the first ones back. So leisure led after the 1990 and 91 first Gulf War downturn. What was the first thing that came back? High-end luxury, high-end leisure. Same thing happened after 9/11. Same thing happened after 2008-9 global recession. Same thing happened after COVID. So the high-end leisure traveler is the first segment that will come back.
Mark, is it also because to maintain earning stability, we know that the management fee per room in a luxury is substantially different to in the mid-scale?
Substantially.
And do you therefore question if you were to be a pure operator of a mid-scale business, 100% asset light, do you think it would make sense because of the fee per room that you would be able to earn?
Right, so I look at it and say, yes, you're 100% correct in what you just said. One of our hotels, a Grand Hyatt in a great location, is the equivalent of probably 10 mid-scale hotels or something like that. So that's why I always marvel at everyone focusing on net rooms growth instead of net fee growth, but that's a separate story. What I would say to you is we are conscious of the fact that with 44 million members in our loyalty program, we have to be available to people in more places when they're traveling. We did a great deal of research during 22 and 23, really 22, to look at travel patterns, and we unlocked some data that's quite remarkable. We looked at our member base when they're not traveling, when they're not staying with us but traveling, where are they staying? And what we found is in 2/3 of the time, they didn't have a Hyatt hotel within a 5-mile radius of the place they stayed, and they were staying at a lower rate. Now, those things are coincident because we only have higher rated hotels. But what it told us is we were losing that opportunity to be there for that member by not having a hotel there, which is why we launched Hyatt Studios, which is an upper mid-scale brand. So I would say there's got to be a purpose to the upper mid-scale entry. In our case, we call it network effect, being able to serve more of the travel occasions for our members and for travelers.
Mark, when you joined Hyatt, how many brands did Hyatt have?
Oh gosh, now I'm so embarrassed by this. We had
5, 6?
five brands.
And today 29.
Yes.
Right.
Ouch.
So my question is that this, and Marriott also probably has 20 plus, 25 plus brands. You have 29. How much is that to do with addressing the consumer need? And how much of that is to prevent area of protection in a management contract?
Oh gosh, no. So that's a great question. I'm glad you asked that. It has nothing to do with AOPs.
Oh, really? Nothing to do with AOP?
It does not, because, no, seriously, we haven't launched anything that is adjacent to any other brand. Hyatt Studios is not going to be competitive with anything else that we've got. You're such a data person. I love you. So let me give you a piece of data. We looked at every market in the entire world in which Hyatt has a hotel. Everyone. On average, we have 4 hotels per market. We looked at Marriott and Hilton. On average, in those same exact markets, they have 14.
But you're trying to be there, right, by being asset light?
No. In fact, when you look at where the brands came from, 8 of those brands came from all-inclusive resorts.
Right.
Where we had no representation whatsoever anywhere close by to any of those resorts. In the Dominican Republic, in Mexico, in the Canary Islands. We had no hotels in the Canary Islands. We had no hotels in the Balearic Islands. So we brought on, through acquisition, we entered a whole bunch of new markets. And so we're not stepping on each other. This is not an AOP play. We're not sufficiently saturated in any market for us to even worry about that.
So going back, then, these 29 brands, Mark, do you think hotel companies are trying to sort of penetrate the aggregators market as well?
When you say aggregators, what do you mean?
So, you know, I heard you talk about Airbnb, and you used a very simple terminology. You said that's a shelter business, and we are in the hospitality business, right? But in India, we have, for instance, Taj has Amar Trails, which is doing, basically distributing independent villas for vacation. Yeah. Marriott, as you know, has Marriott Homes and Residences. Right. So a lot of hotel companies have these soft brands which can do smaller properties in terms of rooms per property. Are they trying to get into the space where aggregators are trying to build a business, right? Do you think that's the intention, that we felt left out when Airbnb became so big and the hotel company said, oh geez, I almost didn't look at this part of the business. And we know it hasn't really worked that well. Airbnb probably is up 18% stock in the last 5 years. You'll be up 150%, right? Yeah. But do you think hotel companies are trying to jostle for being in that space which aggregators were trying to?
I see it as a very different purpose of visit, and the facilities that you're accessing through an Airbnb is quite different than a hotel room. And that what you get is quite different, the services. So I sort of look at this category of home or apartment or villa rental, and it's been around forever, for a very long time. It's been facilitated and animated through these digital interfaces, but the fact of people seeking out rentals has been around for a very long time.
Mark, if you go for a vacation with your family, would you go to a Park Hyatt or a Ritz-Carlton, stand in a queue in a buffet, be in a pool with 100 other people, or would you rent a villa where the chef is cooking what you want to be cooked and you have the pool to yourself?
So if the guest experience was what you described, it must be a Ritz-Carlton, because no Park Hyatt would ever have that problem. And I would never stay at a Ritz-Carlton. Of course I'm going to stay at a Park Hyatt, so let's start there. Secondly, it depends entirely on the purpose of visit. So I'll just give you one example. I just celebrated my 60th birthday last November, and for Thanksgiving holiday, my wife suggested that we rent a house in Cabo San Lucas in a development where there's a hotel. And the reason was because my kids, I have 3 children, they all wanted to be together as one family, and we wanted to be able to hang out and spend time together. So that's what we did.
Mark, we have 5 minutes, so I want to make sure we go to now.
Okay.
So one question is that you have this new East, India, China, often borderline nationalism,
Yeah.
Very confident, very relevant for the global, the new global order. So what's the relevance of a Western MNC in the new East?
I think, it is the new East in some ways, but it's the familiar East for us. We've been operating here for 41 years, 41, 42 years. So we feel like we've lived through a lot, and we feel like we understand the market well, because we've not just been operating here, but also involved in the property market. And I have such incredible respect for people like you and other entrepreneurs who have elected to get into the development and ownership market here in India. It's not easy. Now, of course, the way that economic theory works is if you're willing to put up with that difficulty, the barrier to entry is very high. Usually when the barrier to entry is very high, your returns are very high, or can be very high. Thankfully, given the operating performance that we've seen over the last couple of years, that's coming true. And I feel the same way in China. Like, we've been operating there for a little less time, like almost 40 years. This year will be 40 years. And things have changed dramatically. So China's a bit of a different story in that as India is ascending with respect to its demographic profile, with respect to its economy, and with respect to spending power of Indians, China is faced with a demographic crisis, and their economy is under transition, and they are working hard to rectify that. And you've got a $300 billion debt overhang in real estate, not hotel real estate, but mostly residential real estate that they have to clear. So we're talking about very, very different environments.
Right.
I still believe that the hospitality sector in China has got a very positive future by virtue of the dynamics that we were talking about before.
Right.
So we're talking about 2 very different dynamics. Now, one thing that I am paying attention to is how are US companies being viewed? In India, I have always felt welcomed here, in fact, more than welcome. One of the great assets of India is the warm hospitality you experience, when you're here, and the friendships, you know?
So Mark, congratulations for taking Juniper public, great partners in Mr. Saraf. Any strategic reason for Hyatt to be a part of a public ownership platform in India? Is there any strategic reason for you to be such a large investor in a hotel ownership company in India?
Yeah, I mean, I think there's been so much benefit that we've derived from being involved with Juniper from the beginning, both knowledge base-wise and ability to really understand the market, but also very healthy returns on the investment. And I think, I don't want to say too much because I don't represent Juniper. You can talk to Mr. Saraf, who's here. He's much better spokesperson for the company than me, but I think given the capital raise and the capital structure of the company, like you, with SAMHI, the opportunity to grow that platform is very much available to us. Now, whether we stay invested for the very long term or not, I don't know. I mean, I think we don't necessarily need to own as big of a stake as we have.
And how was the process as a foreign investor, as a shareholder? How would you rate the process of taking a company public?
It's a very different process just procedurally than in the United States. But I was really impressed with the diligence of SEBI and the whole regulatory process. I thought it was well organized actually, and the process made sense to me.
Yeah, so in India, we spend more energy and commitment on the wedding than in the marriage that comes after that. so that's the same thing with.
I love that.
So you thought your process was.
I thought it was pretty good, and actually the whole formation of the book and the investor base. Of course, we are living in a very positive time right now for the hospitality sector in India. People are interested in investing. So the idea of being able to go out and actually find really interested investors.
So at times, but I have a very, very important question to ask.
Yes,
that's
sir.
a bit of a HICSA trivia. So there are 19 HICSAs which have happened.
19?
This conference.
Yes,
This is the 19th conference.
This is the 19th one.
13 at Grand Hyatt Bombay.
Yes.
And 4 or whatever, 6 outside of Grand Hyatt Bombay.
Right.
Do you think it'll go back to Grand Hyatt Bombay at some point?
It damn well better be. I mean, we're spending, I'll tell you, the capital expenditure plan for the Grand Hyatt Mumbai is very significant. It's underway. It'll be finished in short order. It's going to be a transformed hotel. So it's going to reestablish its preeminence amongst great places to be.
Okay. Mark, thank you so much.
Thank you very much.
For your time. It's a pleasure to have you here.
Thank you.
Thank you.